is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable host. And as always, we meet at this time each day.
The following takes place between 2 p.m. and 3 p.m.
Yes, it does. Most every day. And of course, every day when we're trading, we meet, we get together. I want to thank everybody that listens and ask you to tell a friend. And also, if you're listening, think about purchasing some Tiger dollars and check out my 2 newsletters. In the meantime, we've got to get to the markets, which are already in progress over most of TFNN.com. We're up 16 points in the S&P cash. Volume has started to pick up a little, 2.66 billion shares. Again, I'm looking for something like 4.8 to 5.2 billion to reach escape velocity. And my guess is that we're going to come in at about 3.8, maybe 4 billion shares today. A lot of shorts being squeezed out of the markets at these upper levels. Many of the stocks do not have a great deal of volume. We'll be looking at that. The market actually is, I think, showing a lot of ETF action and not actually showing a lot of volume in the individual equities. And, of course, kind of interesting to see a break from the dollar index going lower. In fact, it's up 78 cents, almost, well, it's more than 80%, or excuse me, more than 0.8%. And I don't know, pretty much exactly what the S&P is, 94.74. Those are the major things going on in the market at the moment. And we'll get this party started with a little bit of history right now.
There it's all just a little bit of history repeating.
And in 1861, after a 33-hour bombardment by the Confederate cannons, Union forces surrendered Fort Sumter in South Carolina's Charleston Harbor. The first engagement of the war ended with a rebel victory. As I hear lots of people talk about what's going on politically now, I can only think back to 1861, a day when we were actually shooting and killing each other in mass. Well, I mean, we've got the summer to look forward to. George Soros, he may stir trouble up this summer yet, but we shall see. In the rest of it, though, you've got to think that why everybody is yelling and screaming. In the context of history, a few people yelling and screaming and the incessant call for a political candidate to be Hitler, when we know all the political candidates we have now have not put Jews in concentration camps. We know all the other stuff that's happened. Everybody likes to go off a little bit in the deep end, probably because we don't really have the kind of problems that maybe we had in 1861 or in the 1940s when we were fighting a war for our very existence against actual evil. But just remember, I heard it probably 5 times in the last day. I don't think that any of the political candidates we have now are actually Hitler, literally Hitler, or even close to Hitler. And if you want to talk about real bloodletting, it happened on this day in 1861. Let's move on. Peter Thiel, one of the big PayPal mobs and now big venture investor in California, was out talking about literally everything being overvalued. He says that is because of the Fed, and I don't think that there's a lot new here, but I think what he's basically saying is that Silicon Valley is not in a bubble. It is basically in, or at least it's not in the kind of bubble that we would think, i.e. a lot of people getting hurt. It is a handful of people that have all the risk. Interestingly enough, I think tomorrow we may see our first IPO of any size this year. I didn't see if it priced today, but we will probably try to check that out tonight, and we'll talk about it tomorrow. If you do see that, maybe I'll post it in the den. That would be a big thing to suggest that a lot of what we've had in the last few days is nothing more than the people in Wall Street trying to make sure and push out another one of these highly lucrative IPOs in the market. We did have one of the broker-dealer banks out this morning. Earnings were not as bad as everybody thought, but we shall see if that continues. But I thought it was, if you see the interview, it's actually fairly interesting. But I think he's maybe, since he lives out there, doesn't know. And, of course, having billions really insulates you from the price of anything going higher. I would say that you probably truly are in a bubble. But my guess is that the bubble is in property values around San Francisco. If we were to have a major pullback in these high-flying FANG stocks, I suspect that we could see values in property values, especially in office space and in these areas around Google and Facebook. We could see, I would not be surprised to see housing prices drop 35% in a protracted pullback if these companies start failing to deliver for a couple of years. And I've been watching that. There's a couple of ways to play the Silicon Valley demise of the IPOs and these startups, but probably the best way will be real estate, as it is a fever pitch in that area. Of course, we talked about IPOs. BuzzFeed is one trying to get its foot out the door, but it is looking like it's going to be problematic. It missed its target revenue for 2015. A lot of people were looking at this as one of the big ones for this year. It has sky-high valuations, and as many people out there, but very interesting to see that it did not make it. And, of course, the end is nigh. Of course, 5 giant banks this morning, including J.P. Morgan Chase, Bank of America, and others, failed to fulfill crucial regulatory requirements that Congress introduced, known as Dodd-Frank. They say that there's no way anybody can do it. My guess is that they are just not doing it. We talk about Steve Jobs on this show quite a bit as part of technology. One of the smartest things he did was do exactly what was, or what part of Dodd-Frank's this is. And we're going to run out of time here. But instead of doing a postmortem and finding out all the things that went bad, one of the things big in Silicon Valley and started by some people in Apple was a thing called a pre-mortem. And to me, this is the ideal thing to do, which is let's start looking about when things go bad. Most people will not, because if they saw anything like it, then they would feel like maybe they would get sued or taken into court. But the pre-mortem is what we're talking about. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Anyway, I just thought it was very interesting. Of course, both J.P. Morgan and Bank of America and the rest of kind of going up against this particular one, but as I said, when you launch a new product now, it's pretty much a standard thing to do in Silicon Valley. But one of the things that Steve Jobs did do when he came back in 2003 at Apple was to actually do these pre-mortems, and that was bring everybody in the food chain of developing a product and ask them what they think could go wrong. And they'd put everything up on a board, and they'd figure out how to mitigate problems, make things better, change anything that they needed to change before they released the product. And whether they did or not, at least they hoped they knew everything about what was going to go wrong or could go wrong. And that is the problem with the banks out here. What they don't want to be doing is telling all the people where they're taking excessive risk, which is exactly what this is meant to put out. And I was talking to somebody, I don't know what it was, 10, 15 years ago, and the whole point of the conversation, I just kind of vaguely remember it, but I remember it kind of gelled an idea in my brain, and that is, of course, if you haven't told somebody that there's something they need to know, then that is basically a sin of omission. And what they want to do is make sure that there isn't any ammo for the people in Congress or for the regulators to actually say it. They don't want to tell you where the bodies are buried. They don't want to tell you where the parts of their business are that are weak, because if it comes back, they may get sued or they may get blamed if they continue to decide to go down that road. And that's exactly what these things are designed. It isn't a lot that is good about Dodd-Frank, but this is probably the best of what could come out of it. We do have a mad market, and we will get into it. A lot of discussions in the den as it's been kind of flat here for a little while. We're up 17 points now in the S&P cash, 2.76 billion shares. Somebody in the den did remind me, of course, that Facebook came off. And yesterday in the while we were talking, I said I was trying to actually listen to the F8 conference from Facebook. I probably, this morning probably should have looked at the thing bounce and thought about maybe pulling a short out here for the day. I'm not thinking that it's that great a short. Probably would not lean up to it. But after the conversation we had yesterday where I said I kind of felt like I threw up a little bit in my mouth when I had to listen to the first 10 minutes of him, of the CEO of Facebook bloviate and get on his moral high horse about why he's the smartest guy and we should just listen to him and bow to our betters. I understand that there's a big echo chamber in Silicon Valley, and of course, there's nobody to tell those folks no. Today, we got the second part of that leg down, and that was the COO of the company, Sheryl Sandberg, and it just continues on. But I, for the life of me, I don't understand the idea where these folks basically do one thing, say another. And continue on with it. But more comments that have very little to do with running of their business and much more about probably picking potential enemies that will probably get elected one day are probably not a smart business idea. Now, why are they doing this? And that is to curry favor with some on some political party. But the other thing is just how hard that Zuckerberg is trying to get into China and will do just about anything to do it. I suspect it will be his Rubicon. And just like the other companies that went there to throw huge through huge amounts of cash in a giant hole, I don't think it will be any better. They will try to do and run their business like they have in the rest of the world. The Chinese communists will have none of it. Anyway, down today on 61 million shares compared to being up a little bit on 26 million shares yesterday. So just about everything you needed to know. And I guess that little voice yesterday should have told me something. I didn't pull the trigger on this thing when I saw the open out here, but man, maybe I should have thought of it. We've got a lot more stocks to look at up here. And where are we at? There we are. Not a lot moving on. I thought one of the stocks that might bounce would be Chipotle. It's out here on lighter volume today, so it doesn't look bad, but it doesn't really look like in a day where something should be bouncing, it is actually doing that well. I almost actually went in one today at lunch. I've never actually bought anything. I went in twice, I think, over the last few years. The lines were always too big, and kind of a one of those things. No one goes there anymore because it's too busy. That was kind of me. I never felt like spending that kind of time in line. But not a bad looking chart out here. More likely though, if it can't bounce on a day like today, is 399.14. Has some lighter volume out here, but I think you could easily get into this candle too of the 13th of January, but not a lot of volume to blow through 3.5 million shares. Now, compared to what we're doing now, fairly decent. And of course, just a couple of days after that, you actually gapped up with 3.5 million shares. So this gap could act as support. I don't know if there's a whole lot in this thing right now. I dislike the way that it is acting, though, today. Xilinx is another one of these companies that bounced and has come higher. What do we got here? Let's see if we can't get this. There we go. What do we have? This one's kind of very interesting to me. Of course, Altera was bought out by Intel. Xilinx is now kind of the only pure play left in programmable logic, and that is kind of like a processor like Intel makes, but one that you can mold like clay. For those people that are new to the show, but programmable logic is a huge business, and if you buy something, whether it's a modem or a variety of different equipment, a lot of times that the single biggest cost is one of these programmable logic cores with probably some kind of processor, sometimes built into the actual chip, and Xilinx and Altera both have them. But I kind of like the way this thing did gap up back on the 21st of January, and I think it did that on earnings. It's come back down into this gap. Doesn't look that bad. Volume has been rather tepid. We'll be back in a minute. Give me a call, 877-927-6648, and email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back from the break, up 15 points at 2077, 2.83 billion shares on the New York Consolidated Tape. Had some questions come in during the break. The first one was, was take a look at Western Union. And I guess part of the question out here was why everybody is looking at this as a short. I guess it's being pumped by the Nigerians from the email that I got. And the Nigeri are probably looking at this 1990 November 6th high in Western Union. 6 million shares came in with 5.5 million shares, so a little light yesterday. Actually broke through it today on 3.4 million shares. You want to see the rest of it. It would not probably be one of the stocks that I would pull short here. The energy on the way down was slightly less on this than this leg back up. And you've had a couple of days that had some significant signs of strength. So I don't know what they're looking at. I don't see a great deal in the chart here. And that was for Peter. Peter doesn't tell me where he's from, so he's from Lutz, Florida. Anyway, the Western Union Company had another question about the IPO I talked about that was probably going to price tonight. And that is BATS. If you're not familiar with the BATS, they are an electronic commerce network. It is a place to trade your stocks somewhere else than the New York Stock Exchange or the NASDAQ. It is in its own independent trading platform. If you go back in the Wayback Machine a couple of years, you will remember this stock tried to IPO. And, of course, the same day that it tried to IPO, everything blew up. Their system blew up. The network blew up. There was literally, on their IPO day, nothing that didn't go wrong. And this was just after the Facebook fiasco and it opening up. So there were a lot of this. And I think there was other problems with Apple. A week later, the CEO ended up losing his job and had to leave. But they're starting to dust some of these old critters off. And that is what I suspect is going to be what they try to push out the door tomorrow, and why the market will probably hold up, and they will probably give it some juice. Normally what will happen is the market has a tendency to have a collective sigh as soon as that goes out the door. If you're intraday traders, you may want to watch exactly when that comes out. And when it does, normally if the thing doesn't really take off or really go higher, a lot of times you get at least some level or a little bit of pullback, at least in the equity markets. Doesn't really seem to affect the commodities whatsoever, but look for that tomorrow. My guess is I see the IPO pricing for BATS trading. If you want to check out, see exactly what it is, it's BATS.com. You can check out what their website says that they do, but basically they are just another place to cheaply trade huge amounts of stock, and there's a great deal to that. What else did we? We did Xilinx. We did Western Union. If you have a question, please give me a call at 877-927-6648. Email me at path@tfnn.com. Include at least a first name and a city so I can remember you. I've got to have at least 2 pieces of information to remember anything. Of course, my memory is the second shortest thing I've got. So I need help, folks. I need help in at least the memory department. Other stocks we have, and that is the Whirlpool bunch. They are certainly pushing their last major high. There is a gap not too much higher, but it would be interesting to see what happens in that. Right now, or at least today, we are breaking the August 19th of 2015 high. That was 186.82, 1.3 million shares so far today. Not a huge sign of strength with 450,000 shares going into that 1.3. And that's why I'm saying there's not a great deal of juice in the rest of the market. I suspect in the very short term, a great deal of today's bounce has to do with the street throwing some money at the market. And of course, usually it's other people's money that they tend to wait. But they need to get these IPOs out of the door. Why only about $200 million is the size of this IPO. There's billions on the opposite side of that of additional shares to raise. And, of course, sometimes a quarter to a third of all the money that these big broker-dealer banks do make underwriting these IPOs. Not a bad business. I'm just wondering whether or not maybe this will be one of these, since it blew up on its first IPO chance, maybe one of these things where you actually get a little better deal. But the size is so small, $200 million. I think last time when they were trying to come out the door, it was over $1 billion. So this is one of those stocks where I would imagine that there will be a effort for the underwriters to really drive the price of the stock up, and then start taking all those additional shares that are sitting on the side and let's just cram those into the market as soon as everybody thinks this stock can only go higher. So you may want to watch that one. I think the symbol is going to be BATS for that also. In fact, yeah, the ticker will be BATS. So watch for that tomorrow. Unilever, another stock like Procter & Gamble, as we talked about yesterday, trying to break through its high. It's got a little bit of a reverse out here. Certainly had the volume to break through the August 6th high of 2015 at 46.19, 780,000 shares for that. So, you just needed that really to break through. You tried to get it in October 22nd. It never quite made there. Got back, did a big kind of complex ABC back up to this high. And again, very light volume back up these highs, but that's pretty typical for many stocks out here today. What else did we have going on out here? Some others. Let's take a look at the movers out here. I got a great deal more than them, and we'll kind of go quickly through these. Mead Johnson had news out here, or excuse me, ABX had news. And of course, most of that had to do with gold. I can't really say that you can say that this is some kind of abandoned baby pattern out here, but certainly you've got to be thinking that the 11 million shares so far today is, of course, a whole lot less than the 19. So you want to watch how that comes in. AEM, another one with a little bit of a pullback. A lot of these having fairly standard patterns that look all the same. A little less volume on the pullback out here today. I don't see anything that breaks the trend line yet. Anadarko Petroleum. This one's out here with a little doji today. Of course, I want to just follow up on a few of these stocks and how they've followed the trend and pop from yesterday. Of course, you had a pretty good day yesterday, 6 million shares. This thing is getting back, or did get yesterday, into the high of March 17th that had 6.8 million shares. So you basically had the same kind of volume as you had almost a month ago. And of course, today, kind of light and variable. You would have liked to seen some kind of a follow-up. When we get back, we'll look at AU and then AUY, and BDO and BTU. Ooh, BTU. Bad day to be in BTU. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite should occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hey, we got a few things in the den. A question to look at IOBED name for a short position. One of the things I like to do is see more energy on the downside than I see on the upside. I suspect these two horrible days on the 5th and the 6th, or the 5th and the 8th here are probably what you're looking at, and that high volume low. You had a huge volume day out here, kind of out of the blue, at 6 million shares. I don't know, probably, I think that there are clear charts in biotech out here other than this one. This seems to have some market gas, and I would not, at best, I would like to see the volume on this up leg be and the energy about the same as the down leg. That it was more generally has me saying that this is not one that I would want to short right now. I understand the very light volume out here, but you really need to get the downside energy, and just a couple of days out there seems to be a whole lot less than the move up here. It could go down, it could go up. I just like a cleaner chart that is not as ambiguous as this, and that's probably the best way for me to describe it. We have an email coming in, and that is Bob from Loveland, Colorado, looking for an entry point. I assume he's talking about going long out here, and I've been waiting for this one myself to see whether or not these things set up. You've got a high volume low at $14.64. You got into it February 11th, and of course you've run back up. But a high volume low is not a high volume low until it's been tested. This one has not. It was still, what, 26 cents from piercing it. I go and look elsewhere. Now, you got a nice little bounce. You got back into it. But if you do not go below the previous low, it's just a high probability that eventually it will. You can get moves like that, but normally I would sell the big move off that February 11th low and not get back into it. I really want to see that 1464 tested out there. I don't know if you get it. I would pass if I didn't. That does not mean it's not going higher. Not a lot of volume today. I suspect it will meander down to that 1464 low fairly quickly. We were talking about BTU, and of course they filed for bankruptcy. And I don't know if there's anything else you can say about it other than that. When President Obama became president, he said he would bankrupt these companies, and there's nothing to say that at least a politician followed through with what he said he was going to do. Can't say that he didn't. He said it before and after he was elected. So there you go. Coal companies going to bankrupt them. What else do we have going on out here? A lot of gold stocks, a lot of silver stocks out here moving. Let's look at Yum real quick. Yum brands coming off a little bit. You came back up. I think we got earnings coming up on this one. Let's look at the earnings date. This thing's basically hitting right at where this thing gapped down when everybody found out all the bad news of them being in China. Yeah, April 20th is when this comes back up. So what are we at? 7 days. This thing could hang out here for a while. I know for stocks, this is the kind of pattern I like to short. Unfortunately, with earnings coming so quickly, I would not. But when this thing came down from September 17th down to October 8th, it did so. It had a high volume low. You've now tested that low with lighter volume. You got to like that. It's come back up, but now you're testing that gap down with significantly lighter volume. That had 36 million shares. You probably have a lot of people that are just sitting there selling for anything close to that 82 mark. Even if this thing has good earnings, I expect people to sell into it, and that is what's problematic. If it has bad earnings, this thing could be one of these that has a great deal of movement in the market. CHK, I want to see what this did after yesterday's big move, and we've got a kind of a doji out here. We talked about this huge move in Chesapeake CHK, which came in yesterday with 184 million shares. And, of course, you needed 110 million, so we got the volume that you needed to break higher. But no sign of continuation. I remember when we used to have the IBD folks on as guests on TFNN. They always wanted to have continuation days in the next few days after a big breakout and something with a lot of volume. What normally you do, though, when you have these big volume days, as we've talked about in the last couple of weeks, is an exhaustion move. That is, everything happens at once, and you get maybe a little bit of a chance to get out of it like you did this morning. But now the thing has to consolidate its gains. It basically did everything at once, and you kind of have to keep an eye on that. FSM, Fortuna Silver, a lot of these stocks, kind of interesting out here. You got a little pop on this one that went higher and it moved back in. But I'm not going to say that one day in the metals is going to convince me of anything right now. Marathon Oil, another one in this space that we want to look at. What do we got? Got enough time? Certainly do. This one is back into its last major gap down. That gap happened on the 6th of January with almost 16 million shares. You did get through that yesterday with 44 million shares with Marathon Oil. But again, you want within about 3 days to see some continuation on. So if this thing goes sideways, 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 and then starts pulling back, probably a better time to go ahead and pull the trigger and say that it is time to go on. What do we have out here for Mr. S? Mr. Sprinty, of course, we had the Verizon strike out this morning. I don't know if that's going to affect a great deal of what Verizon does. They had about a year to prepare. In fact, I heard the CEO talking a great deal about how he's been training people for the last 6 months. And they've got a lot of people in right-to-work states that can't strike, all sitting in warehouses with phones in front of them in case if anything it need be. This is, of course, just the wired telephone service part of Verizon. Sprint, I don't know if it's getting a little, you got a lot of these ETFs, and it's not uncommon to see a little bit of pressure out here. You'd think Sprint and some of the other ones are doing a little bit better out here. Not a great deal of movement in this, but I did want to take a look at it at least a little bit. Samson Oil and Gas, that's a penny. and wanted to see how Seagate did. We talked about it, I think, on Monday, and wanted to see if this thing did anything other than also have a lot of volume, squeeze a few shorts, and that is it. But this is what I'm talking about when you get some volume. This isn't too much, but normally you've got probably tomorrow now before Seagate actually needs to get a bid, get some volume, or this thing is just going to pull right back down to the $33 it was at last Friday. We'll be back in a moment. Give me a call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Had a very wise question during the break come in from email from John from Sarasota. He was saying, if this is not a big IPO, is there anything coming out that is? And, of course, this is kind of the dry run. What Wall Street really wants to do is push an IPO out for the properties of MGM. And I don't understand this IPO at all, why you want to get involved in real estate in Las Vegas. But apparently that is the big push, and that's where they will make the big money. But that's going to be for over $1 billion. And if BATS goes well tomorrow and out the door, I suspect next week we're going to start seeing a lot of these trying to get pushed out the door next week, which may be a problem There hasn't been a great deal of appetite for these IPOs. They've been dubious. 95% of the IPOs in the last year are trading below their IPO price, even now. And the question is there an appetite for rather poor IPOs now? If anybody has any idea about why they would want to own the properties as a limited liability deal, maybe you can tell me. But man, I just don't understand that. You're not really, from what I can understand from reading here, you're not even really owning the hotels. It's more like a lease on the land, and maybe they're going to knock them all down one day and you'll cash in then. It's very hard to figure out from these IPOs what you actually get. Again, it's the land, it's the property, it's not the actual business. Very dubious at best, at least in my estimation. Other stocks that we wanted to take a look at before we got out of here. Is this one? Marathon. We looked at Marathon. Oh, JCPenney. Nope, that isn't it. GLD, GFI, FSM. We looked at that one. I'm running out of stuff here in the closing minutes of the show. What else do we have? Let's look at Facebook. Not Facebook. Let's look at Microsoft. I haven't looked at that, and I see one of the emails is asking about that today. I did gap up a little bit. Not much volume, though. I don't really see a lot that pushes Microsoft anytime soon, either up or down. This thing, basically came back with the rest of the market, came back up here. But this thing seems to have found its kind of decent price point around this, let's call it 52 to 55 buck range. And I think you can make a case that it is making a bigger asymmetrical triangle. The earnings date comes in when we have it, April 21st, so we're not that far away from it. They're doing just about everything right as far as technology companies. They continue to do just about everything right. They are not off into the weeds with some bizarre deals like Facebook. I'm just trying to see if there's anything in here. When you talk about patterns that I would like to short, Microsoft comes much more into that, in that you came down with a lot of energy from that February 1st high to the February 8th low. This move up here, with the exception of a big down day, which came on the 18th, really didn't have anything. The juice is kind of light out here. My guess is that this doesn't go anywhere quick before the earnings date, but I think we've got a lot of hurry up and wait on a lot of these stocks, including on Microsoft. In the meantime, make sure that you get some of those Tiger Dollars. You can check out both of my newsletters on the front page of TFNN, and of course, use those Tiger Dollars to get a discounted rate. So why don't you do that sooner rather than later? Don't wait till the last minute. Do it now. And we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
You're watching Tiger TV.